Duolingo stock is down nearly 24% after hours after earnings were released. In this video, I'll be getting right into the shareholder letter and everything you need to know about why this is happening, what is going on, and whether this is reasonable or I believe it is overblown. With that said, let's get straight into the shareholder letter. So as we can see, the Q4 and fiscal year 25 highlights, the revenue is up 35%. However, the total bookings are only up 24%. Now let's get into the difference of those two. The revenue is essentially how much money has been flowing into the business over the past 12 months, and total bookings is forward-looking. So this is how much revenue they will be having in the next 12 months. And we can see there is a difference between the two. Essentially, revenue growth is slowing down and investors are worrying about this. On the other hand, if we look at what Louis von Ahn has been writing, how they want to continue growing in the future, and what they're writing here is what really impressed me and what I'm extremely bullish about, because they are listening to their users, their customer. And at the end of the day, what matters is not extracting as much money as possible out of the customers you have, but rather making a product that is so great that more and more customers come and you can earn more and more money in the future simply from the organic growth, which is how Duolingo has been successful in the past. Now, first of all, what have they decided to do? So far, the video call feature has been only for Duolingo Max users. And this is the way that Duolingo has been integrating AI into their products. What they're doing is they're allowing users to learn a language properly by actually interacting with an AI character, an AI avatar, and practicing their speaking, which is really the best way to learn a language, to practice speaking and integrating yourself into an environment where you actually practice the language regularly. And so they're allowing Super Duolingo subscribers, of which there are many, many, to actually use this feature. On top of that, they're also going to be integrating speaking into the existing exercises. So instead of tapping or typing, they can now just use their voice to complete all of the exercises. They're also going to add speaking adventures, which are AI-powered lessons where they can practice their speaking as well. They're going to increase their offerings. In the past 12 months, Duolingo has introduced more courses, added more features than they have essentially in the past 10 years because they're using AI effectively. Their team, their CEO, developed CAPTCHA. He created CAPTCHA. He's an incredible computer scientist. He knows what he's doing, and I'm completely convinced about this. Of course, Wall Street is going to think that they're smarter than these people. They think, okay, so revenue is slowing, that means competition is winning, people are using ChatGPT to learn languages. I really don't understand. I believe this is completely overblown, and this next section of the shareholder letter is what's getting me even more convinced. Now, so far, users have been extremely frustrated about the fact that Duolingo's mission, their vision that has been at the forefront of everything in the past, has been put on the sidelines. Because so far, their mission was to make education as accessible as possible to as many people as possible for free. And they've actually added friction to the app to make as many people as possible subscribe. But this decreases, this worsens the user experience. And now they're focusing on improving the user experience by, instead of using this friction, just improving the app, making the app more effective at teaching languages, more enjoyable. And so far, they've done an incredible job gamifying language learning, gamifying chess, which is also something I'm going to get into in a minute. They want to make sure that their organic growth keeps going, because the only way to keep the growth they've had in the past going through word of mouth is by actually providing an app, a user experience that users are truly satisfied by. Now let's get into chess. Chess was introduced recently. I'm personally a user of it. I'm really a fan. I've never really been particularly good at the game, and I feel like using Duolingo regularly every day is getting me to a point where I'm really recognizing patterns, improving at it, and this whole gamification factor I think will make just chess and this game more accessible to many, many people. And I think this is one of the biggest growth opportunities for the business. And you can see this in the numbers already. They already have 7 million daily active users in just a year that are using chess. And they're going to add additional product features, which is something I was also wondering about when they would add something like a game review or practicing for openings. And yeah, they want to increase their marketing efforts to get this out to as many people as possible. Math, music. Luis von Ahn has also expressed his interest in adding something like physics or other subjects. And this will just make it more interesting, more appealing to a broader audience. And what they keep writing here about reaching a bigger audience in the future, I think if they truly implement what they've written here, and in the past they have delivered what they have promised, if they do this, this is going to be absolutely incredible. Now the stock is down like crazy. And I think this is a valuation where the stock has become extremely, extremely attractive. I've been buying recently after this massive dip. The stock went down to around $116. I started buying here. It's just been going down more and more and more. And now after this news, after this earnings release, I bought even more at around $91. Let's get into the valuation here. What we're looking at is a business that is doing around $8 of free cash flow per share. Now this has increased slightly in the earnings report, but not that much since their bookings have been slowing. So I will just use this figure here to be extra bearish and say we have 815 and divide it by the current share price, which is 91. So without removing stock-based compensation, we're looking at a 9% free cash flow yield, meaning essentially a free cash flow multiple of 11. Now, if we adjust this by the stock-based compensation impact, this is slightly higher, but we're still looking at a business growing its revenues at 30, almost 40% per year. And this will only increase in the future if they truly deliver on their promises. And so you're getting an incredible business at a very, very reasonable price. And this is why I'm just going to keep buying and buying at these prices and at lower prices if they keep going down.